Is the Fed losing the battle? Will they reduce the value of your cash? What's up, everybody? Welcome aboard. It is Bubba's Bottom Line. It is Sunday, November the 18th, right? Or 17th? What the hell? November 17th. What's up, everybody? It's a wild time out there. We've got a lot of things going on, and the market's continuing to make new highs because right now, that is as they say, that is the only game in town, and they continue to do so. In the face of everything that's out there. And look, we're not going to tell them they shouldn't make new highs. Remember, we don't fight the market. We don't fight the tape. We just follow along and sing a song. We'll just continue to participate the way we have. But in the meantime, the Fed seems to be losing their battle against the dollar destruction, which continues to take capital out of our own pockets as they continue to offer secondaries on cash. It's the central banking system and the Federal Reserve. What a joke! As they continue to their destruction, trying to reduce value of dollars, and of course they're losing because the dollar just won't go down because every other central bank around the globe continues to lower the value of their dollars. So again, it's a race to zero, which is just a race to make it harder for you and harder for me because our dollars go a lot less. So they can talk about the lack of inflation. They can talk about all the things they want. At the end of the day, I'm paying more for goods, I'm paying more for services, I'm paying more for everything, yet they tell me there's no inflation. Again, we'll see how this eventually works out, but as we have said, and we will continue to stand by, when the collapse comes, and it will, okay, again, look, because that's just the nature of markets, okay? Again, at some point, then the collapse will come, and we'll rally back from there, but at that point, I assure you that the Fed will be involved. And it will be their lack of foresight, it'll be their lack of common sense that will be part of the reasons why we fall apart when we do. Okay, because again, if they would let the markets just play, if they would let the markets just be free, okay, we would certainly see what's going on here. And I think a lot of these recessions that we've had, and I think even the recession that we're starting right now, would resolve themselves a lot faster if the Fed would keep their way out of it, okay? Because, again, what you're seeing right now, you've got the stock market at record highs. You got everything going to the moon, which is fine. Again, companies buying back record numbers of shares, big cash, has a lot of cash, right? All the tax savings. I mean, they're loaded up. And again, no big deal. I have no problem with that side of the equation. The problem I have is that we are seeing underneath the surface, which we don't hear about after the record highs, is a record number of bankruptcies. Okay, now, again, there's nothing wrong with the bankruptcy either, but if you would allow the market system to work, it would wipe out the weak and we would just get stronger. But again, because the Federal Reserve, because they continue to stay involved, because they will not allow things to trade naturally, okay, you don't wipe out the weak fast enough, which allows the bubble to grow, and then eventually the collapse got to come. I believe if they would just let the businesses play out, the ones that are weak would fail, and we would continue to move, and you would never have these deep recessions. But again, listen, I'm not an expert, I'm not an economist, and I certainly don't play one on TV, but certainly their methods have never worked, so why would I expect this time to be different? Again, remember, record bankruptcies in a stock market that's going straight up. So that doesn't make a lot of sense. And of course, Goldman Sachs, their euphoria indicator just hit a new all-time high. What does that mean? Is Goldman Sachs calling for the top of the market? Again, I don't know if they're calling for the top or they're not calling for the top. But I know if they do call for the top of the market, it means they probably want to buy. Okay. Again, typically information that comes out from many of the big banks, from many of the big wheeler dealers, is typically led to lead you astray and have they go the other way. Okay. Again, I don't know that for a fact. I just know from the old trade days on the floor. Okay, the way that things worked, and of course we've seen some more investigations into some spoofing from some traders from J.P. Morgan again. I understand what everybody said, and look, I'm not going to get into it, but it happens every single day. It happens whenever you think, okay, it's not happening. And I just go back to the very simplest fact: if you're selling a product yourself, okay, you're not going to change. You're going to try to inflate the value and think it's in demand. That's all I can say. And we will move on. Okay, as you start to see. The marijuana stocks going up in smoke. Where's Cheech and Chong, right? Again, I think the whole industry right now lies on getting Fed approval across the board. Okay, obviously, I don't know how many states, but a number of states now have legalized marijuana. But again, the key is the Fed, so that a lot of these funds can get involved in it. The banks can start taking them out. Yeah, and there's a whole big mess here, and I don't really understand why it's taken this long. Okay, I really don't understand what is the overall big deal. I mean, you've got it in a number of states. It's not like it doesn't go on. Okay, that people that want it are going to get it. Okay, so again, I think it's been proven. You have a lot of athletes coming out and talking about it. And again, do I know the long-term after effects? No, but I'm not a user, so I have no idea. But at the end of the day, okay, it should be legal. It should be legal in 50 states. The investment company should be able to get into it. That should be able to put into mutual funds, whatever you want. And to me, it's a waste of time. And the whole thing is it's like many other things that happen in government. Okay, it's like a ridiculous process where somebody's opinion, as it was with Jeff Sessions, who didn't want it done, held up the entire process. So we'll see, how it works from there. I think are the fools rushing into the market? Is this the tail end of the rally? Are we seeing now all the retail traders come back to the market? Okay, all the people that have sat on the sidelines for the last, I don't know, we go down to 6,000. So for the last 22,000 points, are they coming back finally? It happens to be that many people are still in cash from the original meltdown. Okay, now, of course, we're never in cash. We're always 100% invested in the market because, again, A, we're hedged, and B, we believe in the same simple factor of math that the markets in history have gone up 8.5% a year over year. So, again, if you can suffer through the bad times, you can always succeed through the good times. And again, there's the old saying: if you bought the top of each market over the last 20 years, you'd still be making money. So, again, hey, the end of the day is this is where human emotion becomes way too part of the markets, becomes way too big, and of course it has too much control, which eventually will drive it down to the toilet, which will eventually cause the meltdown. Again, we're staying long. We're not worried, and we're still hanging tight. Again, are we in a recession? Is it starting? Well, freight volumes are negative. Okay, now freight volumes is goods and services being transported. Okay, they're at 11-month lows. Okay, 11 months in a row they've been lower. Okay, so what does that mean? Well, I mean, right now it doesn't mean anything. Again, remember, nothing means anything until it does. Okay, nothing means anything until it means something. So again, I can give you all the reasons why things could be possibly negative, but until they actually mean something to the street, they don't mean anything. And of course, we know that Wall Street has very little concern about anything outside the street. Why? Because they care about the money. And I don't blame them about that. They care about the cash, right? I mean, we've seen many instances where the market should have sold off heavily, and they have not. Okay, why? Because it's about money. That's what it comes down to. There's only one place to go with your money. That's the stock market, the United States stock market. So again, until further notice, the market should continue to go higher. Okay, I mean, again, household debt climbs to record highs with delinquencies rising. So again, there's just another case, but it goes back to the same question: does it matter? And today, it does not matter. Okay, so you have to remember that the markets, when it's time to matter, the markets will make it matter. But until then, okay, with new retail money coming in, and every pundit talking about how much money's on the sidelines. Look, there's always money on the sidelines. I don't give a crap what they say. Okay, there's always money on the sidelines. Okay? Always. So they can tell me that there's all these trillions of dollars that was never there before. money is always there. Okay? When the markets are ready, they will take the new money. So now, are we going to see the continuation of the Santa Claus rally? Probably. Okay. Again, we see no reason why there's going to be problems. Okay. But, you're seeing, a lot of things, again, very negative. Farm bankruptcies are at the highest since 2011. Now, again, that's I think that's for a number of reasons. I think there's a lot of problems. The grain prices are ridiculously low. Okay, so again, basically, their input costs continue to rise. So if you have an asset that you're trying to sell that stays at a relatively low value, and your costs to produce that keep going higher, it's not a very good solution. It's not a very good mix. Okay, now someday that will change. We've gone through these types of periods before, and of course we have to remember. Again, we've had 5 years of bumper-to-bumper crops, and I'm hearing that this year's crop isn't going to be that good, but again, the prices have not reflected that yet. So, between the trade wars, which again, I don't think is the biggest cause of this, you've got no nation, nobody who produces soybeans, corn, and wheat until one Australia, but until nobody's had issues in 5 years. So there's a glut of supply, okay, that eventually should wash itself out. And we'll come back. But the other thing I think is with farming bankruptcies is that you've got too many corporate farms coming in now, and really what happens, they really undercut the actual American farmer, because they overpay for the price of land, and then they bring in cheap employees, and of course they undercut what a farmer can make. And again, so I think there's a few issues out there, but it is a sign of a potential weakening economy. So I think there's things that you have to look at and understand about just the common sense of economics and what's going on. And right now, again, if your costs are going up and your profits going down, that is never a good mix to any type of trade. In the meantime, this is Bubba's Bottom Line, and this is, of course, Todd Bubba Horwitz. We're going to step out here for a break, and we will be back with more after the break of Bubba's Bottom Line. What's up, everybody? Hey, again, we've got a number of webinars you can catch if you'd like to catch them. And we're putting on our micro and mini portfolio management on Black Friday. It'll be our Black Friday special. So make sure you get signed up for that, and we'll put a link on the website for you if you want to get signed up for that. And of course, don't forget about our high school investing program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line and, of course, me. Welcome back. It is Bubba's Bottom Line, and I am Todd Bubba Horwitz, and this Sunday, November the 17th, and of course, markets, new highs. New highs are going to clear up, or new skies are going to clear up, whatever the song is, they continue to go higher. We continue to stay along because, again, why should I think that I can decide where the market should go from here? Okay, so far, we've been long. And again, I can go back to the Amazon earnings, okay? And for everybody who wanted to puke it out, the NASDAQ, when Amazon opened, and the NASDAQ futures went down to about 79.20, okay? And everybody said, I got to get out, I'm afraid. Well, guess what? They're now at 8,300. So that was only an $8,000 puke per contract if you puked it out. So again, the markets are going up until they don't go up anymore. There's no logical reason at the times when they break or when they go up, when they're like this. There's not enough logic here, but we do have companies buying back their stock. We've got a lot of things going on, but at the end of the day, they're going up. Okay, and I think that you're going to see before we see any real sell-off, I think you're going to see the Russell make new highs as well. They're the one index that has not made the new highs yet, so I think you're going to see the Russell make new highs as well. But again, there's no reason, especially at this time of year. Now, I know everyone say, well, last year the markets went, look, they could go down, and we will be willing to get out. Okay, remember, because of our mechanical model, our exit continues to rise up. Okay, so our exit is not very close, but our exit is close enough to lock in a big profit and still stay in the market. So again, I'm not worried about that happening. In fact, I expect it to happen at some point, but just not now. I mean, you're in, you heard the song, The Most Wonderful Time of the Year. Well, this is typically the most bullish time of the year. Yes, we've had a couple anomalies, but if you go back just this year and look, you've seen the two worst months of the year are typically February and September. Both were higher this year. So again, you've got a market that's probably going to finish up 22 to 25%. Okay, again, I don't know. We're up to, I think, 23.5 or 24 right now. So again, I don't see any reason to doubt what's happening. I think it continues to go higher, and I think there's nothing you can do about it. Okay, you can't guess it. You can't try to figure it out. Just let them go, and hopefully you're participating with us in our long. Gold, everybody wants to make a case for gold to go back up. Now, I'm not saying it's not going to go back up. Okay, I'm just saying that right now I see it's going lower. I'm shorted, okay? And it's not because I'm shorted that I think it's going lower, because I would tell you if I was going to reverse it. But at the end of the day, okay, gold has done nothing to prove that it has broken the downtrend, okay? And until it breaks above, probably right now 1,500, okay, and holds there, it's going lower. I think you're going to be looking for, if you're looking at December futures, which this will be our last week of looking at those, but, 1440, 1460 held. Then I think you break through there, 1440, 1420, 1400. Okay. Now again, I don't know how fast it's going to get there, and it may not. It may indeed at some point reverse. But don't try to go back and say, well, somebody sent me an email saying, well, gold was $30 during the Depression. Okay. And I go, okay, great. So gold was $30 during the Depression. The stock market was was it 100? Okay. So now gold is 1,400. The stock market is 28,000. Tell me which one was a better investment. Okay. Again, we seem to forget that the stock market has been the greatest investment in history, okay? Because again, just the way that the values go higher. Look, we can make any reason we want why not to be in. And I'm an owner of gold, so I'm not telling you not to buy gold. I'm just saying that right now, gold looks like it has more room to go on the downside. It's really that simple, okay? And when it changes, we'll change. We were long gold all the way up. So again, I'm not trying to tell you that, listen, I'm not like a perma bear in gold. I'm just telling you that right now it looks like it wants to go lower. So don't look for reasons. Somebody sent me about Fibonacci retracements and all this crap. Again, you can make any case you want. I got one simple one. We're short. The mechanical method, the algorithms we use are short, and we'll stay short. On the other hand, oil, okay, has been moving higher, and it's continued to try to bust that 58 level. I don't know how the Saudi Aramco deal is going to be priced or was priced today. And I think it's at 1.7 trillion. I don't know if that's going to be a positive or negative for the markets. In the meantime, we are long oil. I'm never happy about it, but I'm long it. Okay. And again, obviously, I'm hoping it breaks higher. And again, I still believe that the next big move will be down here as well, as I believe in the markets. But it could go to 60, could go to 61. I mean, again, there's no telling how high a market can go. And I think those who try to tell you, that it's going to go X amount to this level are full of crap. Okay, I don't think you can determine the levels. The market price will determine the level when it finds it. Okay, that's how you determine levels. The price will give you, the chart will show you. For some jackass to go out and project, all it is luck. Okay, it's luck to say, stock's going to go to 322 or oil's whatever. There's no way to tell until a level appears. Okay, so we can all guess and pretend like we know what we're talking about, but at the end of the day, price determines price. It's that simple. Treasury bonds, I don't know. Interesting. Fed continues to screw us and take money out of our pockets, basically, by trying to reduce the value of the dollar. In the meantime, okay, bonds, the bond futures continue to go lower, okay, which means interest rates are going higher. Okay, so although the bank lending rate is lower, our interest rates that you're paying, your mortgage rates are going higher. Okay, you're borrowing your car are going higher. Okay, so they can talk about the cheap rates, and again, that actually will free up some liquidity from the banks. Why? Because now the lending spread from their borrowing rate to where they can sell to you is now widening, which allows them to be able to want to lend money. They didn't want to lend money before because the spread was too narrow. The risk was too great to lend out money. So what they were doing is they were letting the third-party lenders, the usury type of lenders, or the ones who are lending at 10, 12% money, okay, 8%, 9%, whatever, up in those higher levels. And what the banks were actually doing is they were buying those loans and letting the suppliers make a few basis points on top of it, and the banks are taking over the loans. So again, it's a problem. It will be a problem, and that could be, that combination may be the doomsday. But again, I don't know when that's going to be. It could be tomorrow. It could be a year from tomorrow. Who knows? Again, we'll wait for price to determine what's going on. Right now, interest rates are going higher. It's that simple. Okay. So again, you can listen to all these free deals and all this other stuff. Just make sure you read the fine print. In the meantime, The poor old grain markets, they just continue to get pummeled. I shouldn't say pummeled. They just down. I mean, we're short them. But again, they're not exciting to be short. They're at such ridiculous prices. I would love to be long, but again, I have to follow the math. But at the end, I think we will go higher. But right now, it's just been, I guess it's almost like the equity rally. It's very torturous on its way up because it's dull and it drifts. So it's hard to get in and trade it. I mean, if you're long, you're long. If you're short, you're short. It's hard to trade it. And I think grains are like the same thing right now. They're going the opposite. They're slowly, they drift. They take a brick out of you. They go at you and try to take you apart piece by piece. It's amazing. In the meantime, obviously we're short. We do expect them to change at some point, but again, until price tells me I will be short the grain markets. Cattle looks great. Okay, and everybody was worried, and the big down. We had a big limit down day. Boom, bounced right off support. $2 down day in fat cattle or live cattle. Boom, bounced right off. Again, I think we're going higher in cattle. I don't think there's any question about it right now. I mean, I think you're looking for 125 in fat cattle or live cattle. I think you're looking for 150 in the feeders. And again, could I be wrong? Of course I could be wrong. But I mean, that's the next level. We're in the process of breaking out of one level, which means I can then identify and look for the next level. And that's what I'm looking for. I look one level at a time. Remember, we only look to the markets one level at a time. That's how you price markets, because that's where price is. That's where an old footprint was. Hogs, again, December typically weak anyways. It looks like they've broken to the downside. We are short, but again, they were in that wild consolidation band, trading up and down $2-3 a day, which is, they're going up and down limit like it was, like a yo-yo. So again, I think that they've broken to the downside. I think you've got to look for probably 59 to 60 for a level that might hold. And I don't think you can get bullish December hogs until they get over 67 or 68. So we'll continue to watch. And again, obviously we'll update, and we're short. And that's really kind of where it comes down to. And of course, the dollar, as much as the Fed tried to punish the dollar, what did we see happen? A big W formation, and the dollar's back up again. Now we're once again looking at par for the dollar. Okay. So as we got short the dollar, I'm sure we'll reverse it anytime soon here. It's getting close to reversing us, but I mean, I'm still short it. Again, not happy because it looks like it wants to go higher, but again, I will get out when it's time. But in the meantime, it does look like now it wants to go back to par. And again, is par sure it's realistic? I mean, again, the market will tell you where it's going. But again, think about it. As much pressure as the Fed has tried to put on the dollar, it has not broken down. They had it on the run for a couple of days, and it immediately bounced and made a bottom. So again, just remember, okay, price determines price. Okay, don't try to outguess or outsmart the market. You follow the tape. Okay, you follow what the trend of the market is right now. Right now, the trend is higher. And again, with low volatility, ridiculously low volatility, with very little volume, there's nothing to do but either be long, okay, or be out and observing. Because to be short here, to say that you can pick the top is ridiculous. Okay? So remember that. Keep that in mind. The next time you think to yourself, hey, it's time to short the market will let you know when it's time to short it. And don't be afraid to miss the first couple of percentage points on the way down. Because if you get the top, you'll cover far too early. If you get it at the right time, you'll be able to ride it down as long as it takes. In the meantime, this is Bubba's Bottom Line. It is Todd Bubba Horwitz, and of course it's Sunday, November the 17th. We're going to step out here for a break, and we'll be right back with my commentary after the break. So kids, we got a couple of webinars if you'd like to check them out. And again, anytime you want those, you can certainly email me, and I'll be happy to send them to you. And of course, we've got our December 7th, excuse me, not December 7th, November 29th, I believe it is, Black Friday. We've got our mini and micro futures webinars, which again, portfolio management, how to use them. So we're looking forward to that. And there's a link on the website that you can go to and check it out. And of course, in the meantime, don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. We will go back now and go back to Bubba's Bottom Line with my commentary of the week. Welcome back to Bubba's Bottom Line. Of course, every week I give you what I'm thinking, and every week the trolls start flying in every time I give my opinion, especially when it comes to politics. And so, have a way with it. I could care less because again, there's a lot of hate mongers out there to begin with, which you can obviously see. And again, I think this impeachment is the biggest joke in history. Again, whether he did something wrong or he didn't do something wrong, again, I don't understand where they're coming with, and so far there has not been one witness to confirm anything of anything wrong. And again, I'm not saying that he did not do anything wrong. I don't even think I'm defending it. I'm just saying to you that it's the dumbest thing I've ever seen. And the left is so far left that they get about 3 parties with inside themselves. You know, it used to be that both parties were very much near center, okay? And the only difference was the values of some of the personal things they do, which is why I'm a libertarian altogether, because, again, I think that you should be fiscally responsible and socially you can do what you want, right? In the meantime, here we have the trying to raise taxes, take away our money, at the same time not do anything, okay? They haven't even voted on USMCA, and some people say it's no good. I don't know. Listen, I don't care. From what I understand, it's good. From the people that I talk to, they tell me it's good. Okay. Again, if it is, it is. If it's not, it's not. I don't care. Okay. But I would like to see the House of Representatives get off their ass and do something other than worry about impeachment. You want him out, get him voted out. But of course, they can't get him voted out, and he's going to win next time too. Even if it's an impeachment, he's going to win. Okay, because he's not going to get impeached by the Senate. But of course, let them continue to waste our time and our money with all this stupid TV coverage, okay, and with all this news coverage over nothing, and nothing's going to happen. So just think about it. You're paying for it. You are paying for it. Whether you're on the left or the right, you're paying for this ignorance that's going on the Hill right now. Okay, it couldn't be much dumber than anything else I've ever seen. So in the meantime, trolls, send your way. I don't care. I don't give a rat's ass. Okay. To you, I give you the, okay. If you want to troll it, great. Have a great day. In the meantime, this is Bubba's Bottom Line. And of course, this is Todd Bubba Horwitz. Football. We got football tonight. And of course, how'd you like those Cleveland Browns, eh? Terrible thing that Myles Garrett did. That was brutal. Okay. He should be suspended for life. But in the meantime, tonight you got a crappy game, right? You got the Bears against the Rams. 2 crappy teams, okay? The Chicago Bears, one of the first franchises in history. Again, I don't think you can do anything but take the pizza and beer play on the Chicago Bears, okay? Again, I don't see anything the Rams have done nothing. I think the Patriots in the Super Bowl destroyed the Rams. I think you take the Bears for pizza and beer. Nothing too exciting. In the meantime, this is Bubba's Bottom Line. Have a great weekend, everybody. As always, I thank you for being a part of the show, and we will see you back here tomorrow with Bubba's Daily Update, and of course, every Sunday with Bubba's Bottom Line.